India was one of the largest importers of defense equipment. The whole idea of self-indigenization and domestic manufacturing in India of defense equipment started only from 2014. So India has clearly come a long way in the last 10 years. One of the most impressive aspects was that a lot of the domestically manufactured equipment was used in Operation Sindoor. And for me, that has changed perception also for, let's say, a lot of the Indian defense companies globally in terms of what India can actually manufacture, right? So just a simple thing, for example, Akash Tir. That was one of a domestic manufactured air defense control system. So just to put it in layman's terms, it actually helped to intercept, for India, to intercept drones that came in from Pakistan or Air Force that came in from Pakistan, and to actually help intercept it. So it ended up reflecting on all defense forces screens at the same time, so a coordinated answer could be given to that. So in that sense, for me, these tensions have clearly put Indian defense equipment out there and made people understand that this is something that indigenization has actually helped in the last decade. So India's reduced, the amount of imports we should do on defense. So for example, back to 2014, India was importing 70% of defense requirements. That's when the government came in and said, we want to import, we want to switch this ratio. We want to go into importing just about 30%. Yes. So it's been a good journey, and we're still some way away from that 30%, but at least clearly imports have gone down a fair bit and probably closer to that 50% or lower number.
The defence sector is notorious, isn't it, for the lumpiness of the order flow execution. That means quarterly earnings volatility. Where in the listed defence sector do you find this most problematic?
Okay, that's again a very fair question. So I'll put it to you like this, right? There are some companies which are more, so discussing business models, there are some companies which are more product-based, right? So for example, if you look at Bharat Electronics business model, it's more a product-based company. So what ends up happening is as a function of that, you find it's less lumpier as far as, let's say, execution is concerned and revenue bookings are concerned. If you look at a company which manufactures and sells aircrafts, again, if you look at the business model of Hindustan Aeronautics, you'll find their revenues tend to be a little more lumpier, right? Because you need to actually deliver the aircrafts, and then some years you can grow slower and some years you'll see a massive jump, depending on which year you've had the maximum aircraft deliveries. So in that sense, again, it's a company-specific aspect. But coming back to it, I think somewhere valuations do factor in the fact that, some companies, you'll need to look at more a 2 to 4 year or a 3 to 5 year CAGR versus just looking at, nearer term earnings, given the business model. Yes. So order books are fairly good for the sector, and that's what's giving you visibility, right? Like for some of these companies, order books are more than 3 times of current year's sales. So that's where I'm coming from. But execution, where I'm touching upon as well, is the reason you at least have to show execution is so that people get convinced you can actually, or investors get convinced you will end up executing that order book. So for that, I think quarterly earnings is important, and of course annual earnings also.
Lavina, let's bring in Prime Minister Modi, and he seems to be heading for a triple crown moment in terms of trade deals. UK-India is more or less in the bag. EU and the US are waiting in the wings, potentially. All major exporters of defence equipment. But are there opportunities for listed Indian defence names to pursue JVs, pursue partnerships under the banner of these deals and expand into those critical markets?
So, again, here, it's a very fair question. So the way I'm looking at it is, if you, again, go back in time, right, India was the largest net importer of defense equipment and it's only from 2014 that domestic manufacturing capability has really picked up and there's been a thrust in the country for it, right? So the way I'm looking at it is, as far as certain technology goes, India is clearly out there and in a very good position to actually export that equipment. These agreements at the government-to-government level is very key for Indian companies to be able to export outside, because as you must be knowing as well, and investors know as well, that defense is a very controlled subject across countries. So for me, again, India is out there, and our cost of manufacturing could clearly be a good selling point, right, as far as supplying and exporting of defense equipment is concerned. On latest technology, I think India does have some way to go. But for example, like the S-400, which were Russian missile systems that were used in Indo-Pak, right, by India, which we imported from Russia. For example, that, India could focus on indigenizing over the next 3 to 5 years. So just to answer your question, there is scope, but it isn't certain technologies which you will see emerging over the next 3 to 5 years. You might have also, the good part is the government is being very proactive. India is actually out there giving certain countries interest-free loans, which is also in the news. They're giving interest-free loans for countries to actually buy defense equipment, right? From India through Exim, they're routing these loans. So the good part is the government is focused in that area. India's exports are rising on the defense equipment front. So this should continue to give results over the next 3 to 5 years.
And without going into the specifics of the names, Lavina, what about Indian naval shipbuilders, that subsector of defence? Reportedly, again, strong order book, multi-year revenue visibility, though here's the rub, execution remains key.
Yeah, so on the shipbuilder side, the good part for those companies is the visibility that they have. But on the execution side, clearly that is what will, logically, that should take the stocks ahead from here on. So you've seen the re-rating, I guess, for the space as a whole on the order book, outlook change, visibility. And, coming back to it, your quarterly run rate on revenues, your annual run rate on revenues is key for upside from here on as well.